Welcome back to U.S. Farm Report this weekend, our College Roadshow from right here at Iowa State University. And excited for our ag economists on the panel this weekend. Let's start by talking about the supply side, both on the grain side and on the livestock side. And Lee, I'll start with you because I think it was a year ago when we were here, we started talking about, the possibility that we would see this hog herd decline. PRRS had a bigger impact than we initially thought. I mean, it was just starting really to enter the markets. But now a year later, have we seen those numbers recover?
I think what we've seen is that's come to fruition, the decline in the supply, and really you could characterize it as a bit of a retrenching in the industry where we've seen, I think, taken a step back and seeing the supply side really take a breath here and adjust to the higher cost scenario that we're all facing. We're seeing disease pockets out there that's impacting productivity, and there's really not a lot of incentive to expand at this point, and so that's why I think you're seeing these supplies really hold tight and waiting for the markets to react to either higher prices or maybe taking a step back in costs.
So is there, though, still some disease out there that is impacting these numbers, or do you think it really is just the cost side of the equation that is having the bigger impact on supply?
Well, I think it's a combination of a lot of factors. When you look at the pig save per litter, those numbers would suggest there is still some disease pressure out there. What we've typically seen is about a 1 to 1.5% year-over-year increase. We're at still 0.5%. So I think some of that can be attributed to disease. Some of that I think is really the labor constraint we're facing and impacts potentially there. And so that's something to really watch going forward, is I think what we could see from an expansion is, one, the productivity takeoff as well as the breeding herd takeoff as well.
Well, on the grain side, Chad, I mean, we saw a little bit of harvest taking place on our way over here, but not a lot in Iowa. We knew that would be the case. It was a late planting season, but are you having any early harvest reports, and how are they faring across Iowa that we know is a very mixed bag when it comes to yields this year?
I was going to say, Iowa's like the nation in that respect. So if you go to the west, you're going to see your weaker yields as we look out there. If we go to the east, we've got some folks that I know, especially East Central, may be looking at the best crop they've ever seen. So we are seeing a lot of challenges when we're looking at how much yield variability is going to be across the nation and across the state here.
So as you look at some of those areas that maybe are struggling a little bit when it comes to yields, yet those that maybe we have an oversupply, how is basis responding?
So basis is going to try to, if you will, spread that crop out more evenly. And so just like we saw last year, and we're going to see again this year, we see basis fairly positive here as we end, going into the harvest season. We'll see that go negative again as the crop rolls in, and then it's going to strengthen again as we move through the spring into the early summer of next year. Again, trying to pull that crop back towards where we have the weakest yields.
So those that are harvesting right now and trying to weigh, okay, do I go ahead and just sell cash off the combine, or do I need to take advantage, hold, and really wait and see what happens with these futures markets? What's your advice?
Okay, if they're bringing it in right now today, yeah, take advantage of the basis levels we've still got out there. If I'm a week or two from now, though, I'm probably sitting on my hands and planning for how long do I want to hold on to this crop and allow that basis to improve back up again as we move through the course of the marketing year.
Okay, so if we do see strong basis continue, if we do see commodity prices at least hold at these levels that we've been seeing the past month, from a livestock side, it doesn't seem like we're having any incentive anytime soon to rebuild these numbers, Lee.
No, and I think really you're seeing that when you look at cattle numbers, it's really changed producers' production decisions. We put a lot more cattle on feed a lot earlier than we typically do because regions were dealing with drought, so we just had a lack of availability of feed to bring those feeder cattle up to heavier weights. You're also seeing more heifers go on feed. And I think that's the big factor that's changing the trajectory of this cattle herd. Whereas we're going to see more feeder cattle in the short term because of those feeder heifers on feed, but longer term, that means we're going much more reductions in that cattle herd.
And real quick, we're having the discussion before we see the cattle on feed report come out on Friday, but what are these expectations now versus in a couple months when we could maybe see some of this liquidation really start to impact the numbers?
I think expectations are cattle on feed numbers are staying close to year-ago levels, but we're going to start to see those placement numbers come below year-ago levels, and that means that going forward, those cattle on feed numbers will continue to tighten, and that's what the futures market is pricing in. As you look at next spring of fed cattle market, much higher prices reflecting those much tighter supplies.
All right, well, on the demand side, there was some good news this week out from China, but also some question marks when we look at the policy from the Fed, as well as what's going on in Russia and Ukraine. So I want to get both of your perspective on that coming up. But first, we need to take a quick break, and then we'll have much more right here on U.S. Farm Report.